Welcome to the All Things Biosimilar podcast. On today's episode, we have three more big topics to discuss. The first, biosimilars and TAM, or total addressable market. This is a metric that is often used to help identify what the future potential could be for a biosimilars product or portfolio. We do an analysis to try to understand how informative that really could be. Number two, the retina market. Lots going on in the U.S. biosimilars retina market and even beyond biosimilars. We'll go through the latest overview of the EYLEA competitive set, as well as what are some of the key activities, topics, actions that are happening over the course of the next 12 months. Finally, it's earnings season. Q3 earnings are starting tomorrow. So we're going to give a handful of questions and considerations that are top of mind for us for some of the branded biosimilar companies that will be reporting. I'm Andrew Bourgoin. This is the All Things Biosimilar podcast. Let's get started. Welcome. Here we go. Episode 2. You mean to say that episode 1 went well enough that we're doing another one? Yes, indeed we are. In fact, I got some positive feedback from that good old first episode in September. Folks said, loved it. Great to get your thoughts on these topics. It was helpful to listen to it, even watch it. And so here we are, episode number 2. The biggest piece of feedback that I'll be implementing today is to go on a little bit longer. Episode 1 was only 12 minutes-ish. This week's is a bit longer, as we're covering some topics that actually require a bit more analysis, and that means a little bit more of me. So thank you for listening in today. Excited to get started on our first big topic. Let's go. So big topic number 1, biosimilars and TAM, or total addressable market. This is a metric that many of you are likely familiar with. TAM is also often used with SAM and SOM, which we're going to put to the side today. But why it's important in biosimilars, it's often used, especially by public companies or companies looking for investment, to identify what the future potential opportunity could be for biosimilars. And really, it's not that hard to figure out when it comes to biosimilars. And why is that? If you know what products are in your portfolio, then you know the reference products by which the marketplace you're going to be competing in. So TAM is relatively easy to figure out. Companies usually just look at the future peak sales of the reference product, and there's your TAM. Now, of course, there are some nuances that can be put on that figure to maybe help refine it a bit, get a little bit sharpened up. Maybe you're trying to think about whether or not biosimilars could grow that number by having more affordable versions of it on the market. Maybe it's not going to be as attractive of a market than those peak sales because of headwinds from a policy perspective or innovative products shrinking the market size. But in general, loss of exclusivity -1 peak sales, for the most part, is the number that would be used to underpin a TAM analysis. Now, again, while it's relatively easy to figure out what that number is, what's much more challenging is to figure out actually what will be the net revenue or net sales of a biosimilar based on that number. Let's take Humira, for example. In the US in 2022, Humira's net sales was about $18 billion, right? $18 billion would be the TAM. Now, how is that number helping to inform how any of the biosimilar adalimumab products are performing in the market today? It's challenging, big time, especially because we see some products doing relatively well and others not doing as well. So, with that numerator being the same across all biosimilar products, that ultimate performance, there's variation there. And that's what we want to talk about today is what's that connection between TAM and actual biosimilar performance? And then how could we apply that to some of the TAM figures that biosimilar companies are talking about with regards to the value of their portfolio? Before we jump into the analysis, just an example, right? Not too long ago, many of you are familiar with Coherus. This is a company that focused solely on biosimilars for many years, had multiple biosimilars in their portfolio. Humira, Neulasta, had an Avastin and Eylea for some time. Of course, had a Lucentis product as well. Now, you can see here from a presentation that they did in 2017, the number 40 billion is used as a pipeline opportunity. Now, 40 billion, that would be potentially the TAM of that portfolio. Whereas in reality, when we look at the revenue for Coherus's products from 21 to 24, was about $1 billion. And this is not a judgment or any type of position on how successful that portfolio or the execution of it was in the US market, by no means. In fact, Coherus and how well they did with some of these products seen as a success. What we're focusing on is that relationship between how well those products did in the $40 billion number that was used as the opportunity. And that's what we'll be talking about today. The difference between what's being talked about as the future potential and maybe some of the realities that present themselves. How can we bridge that gap to think about where we're going here for some of the biosimilar companies? Here's the breakdown of the analysis that we did. We took 3 markets, Remicade, Herceptin, and Lucentis, and we selected 2 biosimilars from each one of those markets to review publicly known revenue. Really, what drove us to select these are threefold. Number one, it's a good mix of some of the different TAs that we see in biosimilar competition, immunology, oncology, and retina. And also each one of those brands itself, we were able to use the publicly reported information to see what their peak net sales were before biosimilar competition entered. The second or the third thing here that was really helpful is that for each one of the products that we used in the analysis from a biosimilar perspective, Inflectra, Renflexis for the infliximab space, Kanjinti and Ontruzant for the Herceptin or trastuzumab space, and then similarly in BioViz when it came to the Rani market, those are all publicly reported as well, right? With some caveats for similarly after the acquisition by Sandoz. But it was really helpful for us to use that information instead of trying to source and truly understand either IQVIA or Symphony or some sort of data there. This is all publicly reported information. And so that's really what helped us shape the set that we included in this analysis. And so what we did was we looked at the peak net sales that was reported for infliximab, Remicade, Herceptin, and Lucentis, because of course those peak sales would reflect what the TAM was, right? And then we looked at the performance of the biosimilars from launch until 2024, and we identified what an average annual revenue was from each one of those products. And we put together then a case for each of the products that said, okay, here's the average revenue and here's the TAM. What's the percentage of that TAM that each one of these biosimilars contributed from a revenue perspective annually? That's step one. Step two, we then made a portfolio, the good old big US biosimilars portfolio. Selected 7 products, I believe, that are losing exclusivity or planning to experience biosimilar competition between now and 2033. And we identified what the peak sales in the US would be for each of those products. And we applied different cases or different experiences from each of the biosimilars listed here to products in that portfolio. We did 3 different scenarios, some performing better than others, and we get to another number that helps us understand from a portfolio perspective with the variance that occurs for each biosimilar within a portfolio. What is the percentage of TAM that portfolio captured? The last step is then we take those 3 scenarios and the outputs from them, and we apply them to some of the companies that talk about TAM, just to get a better sense of what the future, again, potential opportunity could be, going from that massive number down to potentially reality. That's the analysis that we're going to walk you through here. Let's go ahead and get started with the 3 different markets. So we start first with the infliximab market, or Remicade. Right? This is one of the first markets that experienced biosimilar competition here in the US. And as you can see, the reported net sales for Remicade in the US was about $4.8 billion back in 2016. That's the year that Inflectra entered the marketplace as well. And Inflectra, their peak US net sales were about $385 million. That's one case that we'll look at. Renflexis, as you can see, slightly different, launched a little bit later, but with peak net sales thus far, $234 million. Now, each of these products had a different story in the marketplace. Inflectra, first to launch. As you can see, it took a bit for it to ramp up from a market share perspective, but when it did, it gained a leadership perspective, actually captured a good percentage of the market and retains around 30%. We made an archetype here for market share capture for Inflectra around 25%. First to launch, 25% market share, and Renflexis, a slightly different story. Second to launch in the marketplace, but as you can see, it started to get off the ground, but then never truly did. More competitors entered the space, and we created an archetype for Renflexis around 7.5% of market share capture. Now, pulling all these pieces together, okay, the analysis here, you can see for Inflectra, really what we're trying to get to is that one number that looks at what's the average revenue or net sales for the product, the biosimilar, over its time in market, and what percentage of the brand peak sales does that represent? So the brand peak sales, that's the TAM, and then the average US net sales of the biosimilar. For Inflectra, we see that was about 5%. All right, so Renflexis, slightly lower at around 3%. All right, same TAM, same peak net sales of Lucentis, of Remicade, but amount that was captured on average for Renflexis, slightly lower than in Inflectra. Now, we did the same thing again in the Herceptin or trastuzumab market. And you can see here for Herceptin, the peak sales just under $3 billion, so lower than Remicade. But then when we look at the Kanjinti and Ontruzant peak sales, Kanjinti actually was almost at $500 million here, $479 million in peak sales, whereas Ontruzant about a tenth of that at around $48 million. So very different experiences for these two products. And when you look at the build over time, you can see Kanjinti first to market captured, they were up to about 42%-ish there for about a year. More competitors came to the marketplace. We create an archetype there of 30% overall. They're around 31% as of this report that we use from Samsung. Whereas Ontruzant, different story. Ontruzant, later entrant, and overall around 2.5% market share, which resulted in our analysis, Kanjinti, on average, was capturing about 10% annually in revenue of what the peak sales of U.S. Herceptin, right? Ontruzant, on the other hand, was about 1%. So again, same TAM. Herceptin in the United States, two very different stories, and what percentage of that TAM was captured on an annual basis on average by Kanjinti and Ontruzant. The last example here is Lucentis or ranibizumab. Now, you can see here, even lower than Herceptin, Lucentis peak sales were about $1.8 billion in 2017. The biosimilars launched quite a bit after that. So some of the decline in the ranibizumab market is likely a reflection of Eylea and Vabysmo gaining quite a bit of market share. But still, Cimerli and Biovis in themselves had very different experiences. Peak sales for Cimerli, at least in 23, we believe probably in 24 it did a little bit more than this, but we don't have that data from Sandoz. They don't report specifically on product performance. But 125 for Cimerli, whereas Biovis peak sales in 24 was around 37 million. Now, this is always an interesting anecdote to share, the difference between Cimerli and Biovis. Cimerli was actually second to market and was able to capture much more share than Biovis. We use an archetype here of 35%, even though we can see there are moments where it was over 50% market share with Cimerli. Whereas Biovis, instead, we captured much lower, around 5%. A couple times it peaked up there a little bit, but overall, you can see when we start to bring this to the analysis that very different numbers for Cimerli and Biovis. On average, Cimerli's annual sales actually were about 3% of the Lucentis US TAM. Biovis, on the other hand, was less than 1%. All right, so this tells the story yet again that despite having the same total opportunity of the marketplace, different biosimilars are going to capture different market share and ultimately drive different levels of contribution in their revenue. Now, we capture all of that here again in the overview of the TAM analysis that we did. So starting from left to right here, we see Kanjinti at around just under 10% of the annual net sales or revenue of Kanjinti. It was about 10% of the peak sales of Herceptin. Okay. Inflectra, closer to 5%, right? Still very strong product, been on the market for a very long time, and Renflexis then is actually closer to 3%. And as we go further down the line here, from left to, you can see going from Kanjinti all the way down to Biovis, we see Kanjinti at about 10% of TAM, where Biovis is about 0.1% of TAM. Biggest takeaway, right? Each one of these cases is a very different way by which a biosimilar could actually capture some of that TAM. So what we do now is we take each one of these cases and we apply it to the very exciting, big portfolio of biosimilar products. Now, let me introduce you to this portfolio. So this is 7 products that we identified as products that are going to experience biosimilar competition between now and 2033. You can see here, this includes Opdivo, Keytruda, Ocrevus, Darzalex, Tremfya, Dupixent, and Eylea HD. Now, each of these products is indeed a target for multiple biosimilar companies. We've listed some of the ones here. Obviously, Keytruda is on a lot of people's radars, but also Opdivo and Ocrevus are targeted by both Amgen and Sandoz. Sandoz, in fact, has publicly announced that they're working on biosimilar versions of all of these products. We collected the U.S. peak estimated net sales based on Wall Street estimates and put them in here. And you can see that for these 7 products, we would say the TAM, at least for the US market, the TAM is about $72 billion for this portfolio. Now, we take this and, like I said, start applying different scenarios that use those cases to start to get an idea of what that total 72 billion could actually mean for my makeshift pretend biosimilar company that has this portfolio. Let's go through the first scenario that we've titled one Kangenti, which actually means that we applied the Kangenti case, that 10% capture of the TAM. We applied that Kangenti case to one of the products in our portfolio. In this first scenario, there is a winner, right? There is one product that is performing quite well across the biosimilar class. That's the Kangenti case. In this first scenario, that's applied to Ocrevus. And as you can see here again, Ocrevus estimated peak sales here in the US is about 6.6 billion, and Kangenti capturing about 10% of that. Throughout the rest of the portfolio in this first scenario, we've also included and applied the Ontruzant, Renflexis, similarly Inflectra, and BioViz cases across the different products within the portfolio. All in, together, this portfolio annual average using these cases and having, again, that one product that is doing quite well, the Kangenti case, is about $2 billion for this portfolio, which reflects 2.8% of that $72 billion TAM. Okay, so this first scenario is filled with a lot of different types of performing biosimilars, some less than 1% capture, and then, of course, at least one that is highly successful in its biosimilar competitive set. Scenario 2 takes that one Kangenti case off the table. There is no biosimilar that's performing as well as the Kangenti case in scenario 2. Here we say there's one Inflectra. And Inflectra's case for this scenario was applied to Opdivo. Again, Inflectra is about, we said, 5% annual revenue as a percentage of the TAM. And so here you can see, again, Inflectra capturing that amount, and we applied Ontruzant, BioViz, similarly in Renflexis cases to the rest of the portfolio. All in, this scenario shows about 1.3, actually closer to $1.4 billion in annual revenue, which is 1.9% of that $72 billion TAM. The third scenario is not an uncommon scenario. This is one where there are no Kangentis or Inflectras. In fact, there's a lot of Ontruzant and BioViz cases that were applied. Again, these are products that maybe are capturing 1%, if not below 1%, of that total addressable market number on an annual basis. So when you look here, that the scenario 3 portfolio actually captures about $500 million, which represents 0.7% of that $72 billion TAM. So takeaway from this step of the analysis is to understand that 72 billion TAM can be realized in very different ways depending on the performance of each of the biosimilars within that competitive set. And here we've created a range using some application of the different cases that we've created across the portfolios. Now, let's kind of ladder up to why we're doing this to begin with. There's a lot of TAM, or total addressable market, talk in the marketplace. So we did a review of publicly reported information. We have 4 examples here: Alvotech, Fresenius, Sandoz, and Teva, all in their earnings calls or in company presentations talk about TAM. And what we did here is we just looked at assets from 2025 and beyond and what that number was based on what they have shared. And you can see here both Sandoz and Alvotech have a pretty high number. Sandoz here at $200 billion for their global TAM. And then smaller number of products, smaller TAM for Fresenius, and then again with Teva. Now, this last phase of the analysis takes these numbers and applies the three scenarios that we created. So the first step in doing this, we needed to try to convert from that global TAM to just a US number. And we chose 70%. We did this because we looked at a handful of reference products, and for the most part, a majority of sales occurs in the US marketplace. This is an assumption. All this analysis is directional. 70% here scopes just for the TAM of the region. And you can see that gets us to about 130 for Alvotech, about 80 for Fresenius, 140 for Sandoz, and Teva with a TAM of the US market around 57 billion. Now, we apply the different scenarios to then think what could be the annual contribution from that biosimilars portfolio, going from the massive TAM down to what? And if these companies potentially have a Kanjinti-like performance from one of their biosimilars, you can see the numbers here are actually quite attractive. Now, we did add a 50% risk adjustment. Okay, so the 2.8% that was a result of scenario one's analysis is down to 1.4 because, as many of not all biosimilars get regulatory approval. The products that do get regulatory approval don't always launch. Some of them get approved in 2018 and then can't launch until 2028. And we did create a risk adjustment here. Some folks might think it's too aggressive. Other folks might think it's close to reasonable. Regardless, even with that risk adjustment, we can see Sandoz here is knocking on the door of $2 billion, and they're taking just over 1% of that TAM. And this, again, this is US market, right? When we look at scenario two now, again, maybe no Kanjinti driving revenue, but instead another solid archetype here for Inflectra. And what you see here is still the companies with pretty large portfolios and TAM are still over $1 billion, right? Now, when you get to scenario three, these numbers decline. And this is where if the portfolio does not have a lot of products that are really leading in their class, capturing a lot of share, you're seeing the numbers closer to $500 million or below. All right. Big takeaway here again. TAM, massive number. How informative is that to actually how the portfolios, companies, and products will do? Well, like everything in biosimilars, it depends. Here, our analysis shows that even in a scenario where you have one product that performs as well as one of the best biosimilars to launch in the US to date, you're still going to be potentially at around 1%, 1.5% of what that TAM could be, because the rest of your portfolio probably won't be filled with those numbers or products that are performing as well as a Kanjinti case is. And then the more products that you have that are weighted for that low performance side, the more challenging it is. Some obvious takeaways here, but actually putting numbers to it, we find is always helpful. Now, we will be evolving this analysis because it's everything that's happening in between there that influences whether or not your TAM is closer to a scenario one or a scenario three. And what are some of those key things that help you have success in a market versus not? More to come there. And almost even more importantly is what happens after that revenue. How do you turn that revenue into profitability? What is the OpEx or SG&A investment that has to occur to achieve some of these numbers to begin with? More to come there too. But for now, we're just going to go ahead and start on the second big topic of today, which is the wild U.S. retina market. All right, so the U.S. retina market. Super interesting space. Biosimilars have been competing in this market already. We just talked through some of the Lucentis biosimilars, similarly in BioViz. They've been on the market since 2021, 2022. And Pablu, of course, this is a product from Amgen, is the first biosimilar version of Eylea to come to the market. This launched almost a year ago today. So Retina is familiar with biosimilars. We've seen biosimilars be successful in this space, and we're going to see a lot more activity over the course of the next 12 months with regards to Retina, biosimilars, and some of the key changes in the marketplace that certainly will create more competition and we will be monitoring. We wanted to go through what some of those key activities are, some of those events, occurrences that we're anticipating, and also do a reasonable level set on the Eylea biosimilar market, who the competitors are, and some of the latest updates that we've seen. So this is our all things biosimilar competitive landscape for the U.S. market for Aflibercept. As we mentioned, Amgen's already competing in this space. They launched at the end of October last year, and the product has done quite well. We're seeing that potentially this might be between a $400 and $500 million product in its first year on the marketplace. And importantly, in its label, it has both the vial and the pre-filled syringe. Both of these are in the Eylea 2 milligram label. And as we'll see, pre-filled syringe is something that certainly might create a little variance in the marketplace. Pablu does not have interchangeability, nor does Amgen have another ranibizumab or another retina product, in this case, a ranibizumab biosimilar in its portfolio. All right. We'll come back to whether or not either of those things are important as we go through the list. You can see here the dark blue squares on the left. These are all products that have been approved, yet none of them are yet to be on the marketplace. Celltrion just got approved this past week, and some of these products have been approved now for far over a year. We'll start with Apuviz. This is a product that is developed, manufactured by Samsung Bioepis, and this was a product that was a part of the Biogen relationship in the U.S. commercial rights, along with BioViz. Harrow Pharmaceuticals will be launching this product in 2026, and as you can see, while the current label doesn't have pre-filled syringe in it, we would anticipate that it might by launch. It's an approved product. It has interchangeability. And as we know, they have ranibizumab biosimilar also in their portfolio. If we go down and look at Sandoz, we see, again, another company with a ranibizumab in its portfolio. What will be interesting is to understand how these ranibizumab products, similarly in BioViz, are used within the marketplace. We know Sandoz has paused commercialization of Cimerli at this time, and they plan to reintroduce it either at the end of this year or beginning of next year based on some of the recent statements from leadership. But Sandoz also has two other things going for it right now, as of now, that Harrow's product does not. And the first is the pre-filled syringe and label. Again, we anticipate probably all these products will have pre-filled syringe in its label at some point, but Sandoz's product does. The second thing that Sandoz has right now that Apuviz is without is clarity on market launch. Sandoz announced not too long ago that they have a settlement in place with Regeneron, and they'll be able to bring their product to market in Q4 26. Now, Formycon also announced that this will be the case for them. They'll be launching, or they'll have the opportunity to launch the product at the end of 26 as well, but they'll be doing it through their partner Valorum Biologics. We are tracking activity with Valorum through their partnership actually with Xbrain for a ranibizumab product. You can see here, that's on a review, and we anticipate actually PDUFA or BASUFA date for that product next week. Biocon is also participating in this market, and they actually were the first company to settle with Regeneron, the reference product sponsor, and they have a market entry date of second half 2026. Now, we don't know details about any of these dates. These are, 3 to 6 month timeframes here by which they've been communicating to the public, but we would anticipate that Biocon would be second to market under these existing conditions. Now, again, Celltrion also has approval here. They got prefilled syringe in their label, but there's uncertainty around their launch timing as well as Harrow's launch timing. Now, Teva and their partner Alvotech have a PDUFA date or BsUFA date coming up here very soon. And we can see that with Teva and even potentially for Senius Kabi, that's creating quite a competitive marketplace. We already know that there are 6 approved products with 1 competing in the market. Add 2 more, that's 8 all in for a product, Eylea 2 milligram, that is also going to get some market pressure from both Eylea HD and Vabysmo. And thinking about why that is and what's happening over the next 12 months, like we said, we're expecting a lot of things to occur in this market that we're monitoring. The first happening next week is this PDUFA date for the proposed biosimilar version of ranibizumab from Xbrane. And if this product gets approved, this would be the third biosimilar version of ranibizumab here in the US. And this would be the first product that Valorum Biologics has, at least biosimilar. We remain curious as to the place ranibizumab has with biosimilar Aflibercepts, not only available, but with many more to become available. And we will be watching closely next week for this announcement, and also watching closely with regards to Eylea HD prefilled syringe. Without going into too much detail on the history of this, there's been continuing challenges with the Catalent plant in Indiana. This is the manufacturing plant that the BLA was filed with. Actually, even today, Regeneron announced that they'll be, in the next 3 months, filing to have another plant included in the BLA, which doesn't bode well for a launch or an approval of the Eylea HD prefilled syringe in the immediate to near term. The company Regeneron has shared that the update on the prefilled syringe and the PDUFA would be coming in late October. We look to that as a key catalyst here in this marketplace, because with that prefilled syringe, Eylea HD actually might see increase utilization and put pressure on the Eylea 2 milligram market, of which Pavblu is actually doing quite well, and we will be celebrating its first birthday here on October 31st. I have shared that I think that this potentially could be one of the most successful, if not the most successful, first-year biosimilar launch for any U.S. biosimilar to date, and we will see how that stacks up here, likely in the next podcast. Along with that prefilled syringe PDUFA for Eylea HD, there's also an RVO, another indication that's on the 2 milligram label. It's yet to be included on the 8 milligram or the Eylea HD label, but once there is inclusion, again, more patients potentially that are on 2 milligram, where HD is a better option for them, those RVO patients, once on label, potentially could go there. And then we turn to 26, and that's where a lot of biosimilar activity could potentially be happening in this space. As we mentioned, Cimerli has been paused commercially, and there's anticipation for that product to be relaunched either at the end of this year or beginning of next year. Now, how Cimerli comes to market, how will it be used? Will it be used in a way to support Sandoz's Eylea biosimilar? Is there a place for ranibizumab biosimilar anymore with Pavblu competing? That's a question that certainly we'll be watching, both for Cimerli's relaunch and Harrow's launch of BioViz, which they said at their investor day is going to be mid-2026. So we see maybe the first half of next year as potential reintroduction of some of the ranibizumab biosimilars. What does that look like? Does it matter? And how will it matter if it does? Where then the second half of next year becomes all about this next phase or wave of Aflibercept biosimilars with Biogen's product, Sandoz's product, Formicon's product, or Valorum Biologics' product competing in the marketplace and potentially others as well. So a lot going on over the course of the next 12 months. This is a space that we find fascinating and certainly something that we'll be following. And hopefully this update has been helpful. All right, on to the final big topic of the episode. And this is all about earnings, right? Starting tomorrow, actually, our all things biosimilar coverage of earnings begins with Johnson & Johnson. And as you can see here, there's a handful of companies that we go ahead, either listen to the call or read the transcript, oftentimes both, and put together our reflections on biosimilar related topics from these companies. What we wanted to do in this episode is share with you ahead of earnings season what some of the interesting questions or topics or considerations related to the US biosimilars market that we're going to be listening for. And this is both on the brand side as well as the biosimilar side. So we've selected a few companies to start with. The first is tomorrow's call with Johnson & Johnson. There's three things that we're focused on here, but primarily, how's it going with Stelara? J&J has taken a position similar to how AbbVie did, where they believe that the Humira erosion and impact was an archetype by which Stelara was going to follow the same path. And part of that isn't just the degree of erosion, but where the utilization or the scripts and patients go during that time. For AbbVie, that was a lot of patients, and utilization wasn't just going from Humira to biosimilar versions of Humira, but some of it was going from Humira to some of the new MOAs, so the Skyrizis and the Rinvoqs. J&J was thinking probably would be something similar, right? Where all Stelara utilization that would migrate wouldn't just be to the Stelara biosimilars. In fact, maybe some of it would go to Tremfya. And that's where we really want to see, number one, Stelara's erosion, since really biosimilars started getting uptake with coverage at the beginning of Q2. And trajectory-wise, is it along what J&J was anticipating? Number two is that Tremfya line. Is that also in line with what they were anticipating with regards to capturing some of that business from Stelara versus biosimilars capturing that business? And overall, we're just curious on the immunology market basket for Johnson and what the performance is. We know Remicade continues to do quite well. It's annualizing at around $1 billion a year for that company. How is that going? And then number two, really trying to understand Symphony and Symphony Aria. That's a product that, of course, we're anticipating biosimilar competition. And as that product nears LOE, how well is it performing? So that's J&J tomorrow, a week from now, plus a few days, Thursday, October 23rd, Samsung Biologics is reporting. Now, this is an interesting one for us because there's a spin happening, right? Biologics and Bioepis are becoming two separate entities, and we're really interested to learn more about this. The timeline for which they were planning to spin, it was supposed to be early October. Now it's pushed to early November. So any updates on that will be exciting for us. Also, we're curious if as Epis Holdings Company, the new entity, becomes established, will there be new information about the pipeline, right? We know that a lot of companies in the biosimilars market over the course of 2025, specifically Sandoz and Alvotech, have released more names of the products that they're developing. We know that Samsung has yet to really expand their list of biosimilars that they're working on in the past few quarters, and it would be really interesting to know what additional assets they are developing. With the launch of Epis Holdings Company, that might be an interesting time to do that. So we're excited to see more from biologics. Roche, obviously a very important company when it comes to biosimilars because, like Amgen, a lot of the reference products come from Roche's incredible R&D. There's a few specifically that we're interested in this quarter. The first is Actemra. Actemra has now 3 biosimilars competing in the US market: Tyenne, Tofidence, and Avtosma. Over the course of the past year, Actemra has actually performed, I think, above expectations and has really retained a good portion of the tocilizumab share, and estimates are suggesting that in Q3 this could start to decline. We're curious to see the rate by which it does, if it does, as that may reflect that some of the biosimilars are actually starting to become a bit more competitive. Second is Xolair. So, like Symphony, we expect Xolair to be a biosimilars market that opens sometime in 2026. What's really interesting about Xolair is that this is an older product. It's been around, but it has some indications that have really just turned on over the past 5-6 years. Urticaria is one of them, but also food allergy. And food allergy we've seen is growing in this market. You can see here between Q1 and Q2, there was a 35% growth in Xolair quarter over quarter. Like, that is pretty impressive. Q3 estimates showing this calming down quite a bit, but we're going to be curious again to see how that product, especially in that segment, continues to grow. Because if you think about it, for a lot of biologics, a lot of these reference products that have biosimilar competition, they're competing in a market for decades before biosimilars enter. Mira, Remicade, Enbrel, these are products that have been around for decades. So I think Enbrel's 1998, right? Like, they've been around. These are known entities. They have built industry, and with that comes a degree of equity, trust, and that's something that when biosimilars launch after 15, 20 years from the original launch of the reference product, sometimes it's very hard to break into. Xolair in food allergy really hasn't been competing for that long. So if biosimilars are launching and they're able to compete in that segment, maybe some of that brand equity isn't as strong. And this is one of the reasons why we continue to monitor this space. The last product within the Roche portfolio that we're going to be monitoring here is Vabysmo. We just talked about all the activity happening in Retina, and primarily we're focusing on Aflibercept, right? The Eylea HD and all the biosimilars and how they're competing. Vabysmo is a product that's continuing to do quite well in this space. We have a business question that's open around, does all of this change and complication in the Aflibercept world create some sort of fatigue? Is there, I can't remember which biosimilar is being covered. How many do I have to have in my fridge? I don't know what's going on with this one. I can't even pronounce. Oh, Vabysmo, that's clean. We don't have to worry about anything. We know the product. There aren't 10 biosimilars we have to worry about. Is there going to be any type of uplift for Vabysmo because of the new complexities and the competitive set for the Aflibercept market? That's something that we'll continue to look at here with a 12% estimated growth quarter over quarter here for Vabysmo. We'll see on Thursday, October 23rd, if that reads through. Regeneron, of course, really don't want to talk too much about this one because it's obvious here. We want to see how the 2 milligrams doing and how HD is doing. The positioning here has been that HD continues to grow and Eylea is doing just fine. How much is HD going to grow, especially if there's continued delays on the prefilled syringe side? And overall, what is the size of the Eylea franchise? Is that trending down? Here, estimates are showing potentially that's going to drop a little bit here in the US. But of course, all eyes on Eylea HD prefilled syringe and what happens there. Of course, Sandoz is one of the companies in biosimilars, questionably has the deepest bench of portfolio products. We remain focused on, of course, the U.S. market here and how their current business is doing. Sandoz, unlike some of the other biosimilar companies, they don't report out specifically on products, nor do they report specifically on the U.S. It's part of the North America segment here. And when we look at their biosimilars revenue as a function of the North America segment. It's actually the second smallest segment across any that they report on, right? Either generics or biosimilars across Europe, international, or North America. Now, we don't know how much of that 815 is the US market. We also aren't entirely sure exactly where they capture some of the business from the private label deals. So our question and what we're interested to continue to hear about with Sandoz is just how well the US is doing, right? Pyzchiva is launched. They've got Jubbonti and Wyos now in the marketplace. Hyrimoz might be the most successful adalimumab biosimilar competing in the US market. All of these together, how well is the US business doing? That's what we're excited to hear. Hopefully any information around how well the non-private label business is doing is also informative to us, and we're looking forward to that. Last company here that we're going to highlight today is Amgen. Amgen's one of the fun ones to listen to because they talk about their branded portfolio and implications of biosimilar competition, and then, of course, their biosimilars themselves. So for us, obviously, Xgeva and Prolia, this is the first earnings call where there's actually going to be a handful of months of competition from biosimilars, predominantly from Jubbonti and Wyos, and how well is the defense strategy going? Now, remember, Prolia is a very high volume market. There's a lot of Prolia units out there. And so if there is impact, we probably will see it. This chart here pulled from the terminal is showing us that there are declines directionally happening for both those products. We would expect that's the degree of which it's happening, the ramp or the deramp in this case. That's important. The second thing is Evenity. If that is pushing up, interesting to hear how the team talks about that. And of course, we're also curious just to hear Pavblu's numbers as well as Wezlana. We may get numbers on Wezlana, we may not. We're not really sure exactly how that's captured, so we're excited to hear a bit more of that with regards to Amgen's earnings as well. Plenty of other companies that we follow, and we are excited to learn everything from, is AbbVie going to give another haircut to Humira revenue estimates, to is Pfizer going to share more about Trump RX and Abrelada's inclusion in that? So over the course of the next 5-6 weeks, a lot to learn, a lot for us to get excited about here. And all of this, of course, is included to our premium subscribers who get our earnings review coverage. We put out our notes within 24 hours after the earnings calls, and also some tidbits of each of those we pull into the 351K report, which is part of our basic subscription service. If there is any other questions that you might have beyond what was in today's show, be it about the all things biosimilar subscription or Bourgoin Insights Group in general, by all means, please reach out. But thank you so much for listening today, and look for the next episode, hopefully to come just in time for Thanksgiving, and then one more before the end of the year. Wishing you all a wonderful October, and talk to you soon. Thanks. Style and that shit go boom, yeah, boom.